Hello guys, welcome back to another Magic FX video, and in this video I wanted to talk about order flow, and that's order flow as I see it rather than what may be the actual definition, because I don't even know what the definition of order flow is. I know a lot of people these days talk about footprint charts when it comes to order flow. Even some of the members of Magic use footprint, and for me that adds another layer of complication to price, and it's something that I try and kind of stay away from. I get scared of like numbers and different things. I like to just see pure price action on the charts, and I'm sure it's great and I'm sure it works, I'm sure it's lovely, but yeah, not for me, and I don't feel it's necessary for me. But I wanted to talk about my definition of order flow and how I use it in price to define pretty much which areas I see are valid to trade from, aka open for business, and which areas that I see as closed for business. And really it's just a way of eliminating certain zones and areas of price where, you know, it's already been mitigated as far as done its job is concerned. But yeah, it also allows us to see areas of price where we're likely to get a reaction, and it works on all time frames the same way. It's the same logic, and it's kind of just things I've talked about before. So let's get into it. I did an Instagram post on this earlier. If you follow me on there, you'll have seen this, but I guess I'll go into it in a little more depth with this video. So you see, if we have price coming down like so, we have a bullish up move, and then we have a break of a low. We are bearish now, and then we come up, and then we break again, and then say we come up, we break this high, and then we break again, and we break the low, pull back, and then pull back again, and then we come up here, and then we break again. Now, looking at this, you know, if you've seen my videos on structure, you'll know that this is major breaker structure. This would be a minor breaker structure. Why is that? Because of a failure to mitigate the premium here. So the way that I use major and minor structure, or look at structure, is using this concept of order flow. So it's about the mitigation of price. So if we look at this, we'll see that we have as I say, our first breaker structure. Now at this point, you know, it could be any kind of breaker structure. It doesn't really matter to me. We're following the price from this point onwards. But let's just say this is a major breaker structure. Now what we're looking for is a pullback. We expect a pullback at some point after a breaker structure. Now whether that pulls back to here, or pulls back to here, or, you know, pulls back to right to the extreme, pulls back to kind of the EQ, whatever, that determines what kind of structure is next formed. If you look at structure mapping part 2, the video, I'll go into this probably in more detail. We then had a minor breaker structure. What happened next? We then broke that minor structure and then came back down. So this is what I would refer to, and you've probably heard me say before, a re-establishment of order flow. It's when we go from being minor structure back to major structure. And you know, there's various ways that is valid for me. I go into that in the strategy guide, Magic FX, and all that kind of thing. But an easy way to determine that, and one of the ways, is if price, you know, breaks that minor, taps into this premium, and then breaks down again. That is a re-establishment of order flow, and ideally mitigates a zone. And this is pure order flow right here, and it's expected to happen. This was never really expected to hold because price didn't do its job. So this previous premium is still open for business. You see, so even though we had a break of structure to the upside here, we can see that as just, you know, call it what you want. Call it liquidity inducement, call it a fake boss, call it any number of twatty little names that you would like, but really, in my opinion, it's just it's not open for business because it didn't do its job, and this is open for business, and that's what price has come to. We can expect a reaction from this zone. If you get a setup in there, you can it's a high probability to go in your favored direction. So yeah, as price continues down here, what you can see here is that again a failure to mitigate the premium here. So when price is moving as such, it plays out perfectly. Like, we can have all our expectations of price pushing down, breaking structure, pulling back, mitigating the premium, and then continuing on its jolly old way to break the low again. And that's the ideal situation. Might do that one in I don't know how many times, but yeah, that's the ideal situation of what we're looking for. But it's very more likely to be a more non-linear path that price takes. So like down here, we had another minor breaker structure, and then what happened? We failed to mitigate that minor premium. So what's this? Well, this is what I would call a minor one, or minor, whatever you want to call it. So we have no mitigation of an area above in this premium. We had no mitigation here, so a series of non-mitigations. Price is getting weaker and weaker in terms of structure coming down here. And then what happens next? I know this is just a line that I've drawn, but you'll see this happen. Price just takes this out, our minor one, takes out our minor, comes up to this previously unmitigated open for business bit of price, and then continues down. So you might be thinking, we've broken structure, but really price is still bearish, like majorly bearish, and the bearish structure is still in control. And that is the order flow being present is when we have these mitigations, like so. Now, what you may get is perhaps something like a zone up here, and then this just taps, like it taps into the premium, but it taps air, what I would call air or imbalance, or something like that. In that case, it's still a valid re-establishment of order flow because we've taken out, liquidity here, and broken structure. So we have order flow, we have this area, and we could look at zones in here. But when we're talking about open for business areas, up here is still open because nothing, a valid sell to buy, buy to sell, whatever zone was not mitigated up here. So, price could still come back up here, make us majorly bullish, and then tap into here, and then still continue on. Or it could just have a reaction that takes us down to the discount of this after the major breaker structure, and then carries on this way. Either way, it's likely to get a strong enough reaction for a trade because it's an unmitigated area, in theory, anyway. So, yeah, that's the in terms of order flow and I guess structure. The order flow determines the structure and gives it a name. Now, you may have seen my latest video where I say I don't really use structure anymore, and that's not necessarily true. it's not the main focus, but it is still used. Certainly on the higher time frames, I just don't spend forever now mapping structure on the 1 minute and things like that, because it's not necessary to the way that I trade now. But yeah, this is, a really cool concept, and the minor one thing. I know there's also something I may do a video on. Another point is a concept of battling structure types. So if you've got like a minor one range coming up against a major range, then the minor one range is likely to fail, and that major range will cause a break of that minor or minor one range, because it's like different levels of ranges battling against each other. So yeah, I hope this was of some use, and I hope you enjoyed this short video on order flow and structure. Yeah,